Let's start on Bitcoin, because we hit 126, all-time high in October. We're down about now 22% since then, John. Explain this move to us. What's going on here, and what do you think comes next, near intermediate term?
Well, in terms of short-term price movement, not to be trite, but more sellers than buyers, right? That's ultimately what happens. So I try not to, we as an exchange care about price discovery and efficient price discovery and value transfer, and not so much causality behind short-term movements. But I'll remind everyone that this is an asset that is up an extraordinary amount over the duration of its lifetime. Year on year, we're still looking at, I haven't done the numbers yet, but probably looking at 35, 40% year on year return, even with the drawdown. The ability for an asset that has as much upside as Bitcoin to periodically have these types of price corrections or mean reversions, however you want to phrase it, it shouldn't be surprising. So throughout I think I've not been on your show, but all the shows I've been on during the bull run, the advice is the same. Dollar cost averaging into volatile assets is smart. If you believe in the thesis, buying at a discount in a consistent, sober, thoughtful way also seems smart.
Mark, let me get your thoughts. Same question about these moves we're seeing. Yeah, I should mention, so Bitcoin down 22% from that all-time. I'm just saying Ethereum's down 35%, Solana's been cut in half. What do you think?
Well, I think one of the things that's been overlooked is the fact that back on October 10th, we had what was effectively a cataclysmic event for the crypto market that the mainstream may not have picked up on, but we had a flash crash. And in that crash, we saw about a quarter of the crypto market makers go out of business, which if you think about that, translate that to traditional finance, that's all you would hear about in the news. But as a result of that, we are seeing some healing that's going on with regard to the liquidity in the market. And at the same time, one of the big catalysts for crypto is the potential signing into law of the Clarity Act, which would create a regulatory framework for crypto. Well, the U.S. Senate was not going to be taking that up when there was a government shutdown going on. So you had a confluence of the larger macro with a crypto-specific event, and here we are, quite a bit lower than where we had been a month ago.
Dan, here's a simpler question, but honestly, it's a question I will get from friends and family. They'll say, what is Bitcoin? What is its point and purpose? One school of thought, I've had guests on the show who say, don't overthink this. It's digital gold. It's just a hedge against fiscal irresponsibility here and abroad. Is that how you see it?
I view this more as obviously, I think it's more of a risk asset than most people give it credit for.
Why do you say that, Dan?
Because it trades down a lot when markets are volatile, right? So I think those movements, that volatility, you see something that trades down or up so much, so quickly, and it's gone up so quickly over such a short period of time, that to me is the epitome of a risk asset, more than people give it credit for. That being said, it's a VIX on the NASDAQ. If you think about it like that and you don't overthink it, if you believe that we're headed to a great place and we have our sort of official price target for Bitcoin and it's going up, then it should outperform.
What is that official price target?
I think when we cover MicroStrategy, so we have to have an official price target. I think we're close to 150 by 2027. That's kind of when we published our note on MicroStrategy. That was our sort of official stance of where it's headed towards.
John, here's a question that came up today at Invest. Will Bitcoin ever be as big as the gold market? We talked to Michael Saylor. You might not be surprised that Mr. Saylor says yes. Here's what he says. He says Bitcoin will be a larger asset class than gold. Puts a year on by the year 2035. What's your reaction to Mr. Saylor?
So he's a very smart guy. And I read his analysis of why that would be the case. He's tying it to the virtual end of Bitcoin production. And the fact it will take 100 years to produce that incremental 1%. He's not wrong that in terms of, if you look at other assets that are priced by the marginal unit of production, like say crude oil or natural gas, it's not uncommon for those assets to spike up when that marginal unit of production gets more scarce. So if that extra barrel of crude oil coming out of the ground is bid after, then crude oil prices will go up, regardless if there's 1 trillion gallons under the ground. So his analysis is thematically reasonable. Hard to tell what's going to happen, but I view Bitcoin as complementary to, as opposed to a replacement asset for gold.
You could own both.
I own both. I mean, in terms of the look, long-term inflationary hedges are difficult to figure out, and most large investors have not figured them out. So you can dollar cost average the global economy over time, that would be some type of inflation hedge, or you can try to pick a basket of assets that you think will perform well. Most funds that have looked at that problem, when they run the analysis, Bitcoin is a part of, maybe not the only asset, but a part of that asset. It incrementally helps inflation hedges over time because, again, it can be viewed as a hedge against money printing.
What's the risk? I'm listening to this.
Sure.
John, I hold Bitcoin. Yep. What's the risk it ever goes to zero?
If you think about the universe of things that would have to happen, what's the risk that the internet ceases to exist? What's the risk that the plumbing that interconnects us as a society goes away? So I hate to ever, I mean, look, crude oil went negative less than 2 years ago, right? The world's most important valued commodity. For a brief period of time, you had to pay someone to take it, right? So who would ever imagine that could happen? Obviously, it's not negative now. So markets can do really weird, crazy things. So I don't look at short-term price corrections when I think about the underlying thesis for why it should exist. The computational complexity that represents Bitcoin at this point, to unwind that completely, as well as the hundreds of millions of people who believe in it, is it possible, perhaps? Is it likely? No.
Mark, let's give people some investment ideas. All right, here's three as we head into 2026. You're telling clients, got three here, correct me if I'm wrong, Galaxy, Hut 8, and Strategy.
Yes.
Is there a theme or common themes that sort of join those together, Mark?
Well, with the first two, with Galaxy Digital and Hut 8, these are hybrid firms. Galaxy Digital is actually our top pick in the space, and that's because it provides two ways to win. The company's base, what it has built since its founding, has been an institutional platform focused on crypto. They're basically trying to build a merchant bank a la Goldman Sachs around crypto, and they've been able to get a significant first mover advantage as a consequence of that. So as we see institutional adoption of crypto increase, with the Clarity Act being a near-term positive catalyst in that regard, that business should do very well, as should the institutional platform at Coinbase. At the same time, Galaxy Digital, by virtue of buying a Bitcoin mining plant in Texas, back in December of 2022, when we had just seen the FTX collapse and people were thinking this was the end of crypto, they bought this facility for Bitcoin mining. As it turns out, it was convertible into an AI data center. And so now the company is sitting on 3.5 gigawatts of capacity in Texas. It's already signed contracts for the first 800 megawatts with CoreWeave. And the value of that, according to our sum of the parts, is, at least at this point, greater than the value of the institutional platform. But you put the two together, and there's an awful lot of upside. Again, a couple of different shots on goal.
Dan, those are Mark's picks. When clients are asking you top ideas heading into 2026, what are you telling them?
Robinhood is kind of the, I like two names very much, and there's another name that I want to mention here as well. So Robinhood is kind of your quintessential killer app, right? I know the price has been up a lot, but I think you just had Vlad on TV here for a long interview before that. They're just a machine. They're going after a $600 billion plus TAM. Today, they're less than 0.5% of that TAM, and they're going to 10x the company. So that means this could be like a $30 billion revenue company in a few years, not that far long. I also love Affirm.
Why do you love Affirm? We had Max on as well.
How could you not love Affirm? I love my wife, and I love Affirm as well. Don't get me wrong. My wife and my kids, and then Affirm, in that order. But
why is Affirm a buy here? Strong buy.
Because the TAM, the total addressable market for Affirm, is literally unlimited. What I mean by unlimited, it's basically all of credit, and they're offering a way for young people, and not necessarily poor people, but young people that don't like credit cards, don't like to revolve credit, to basically take a loan, like pay as you go, right? And I do also want to mention eToro, which we feel like is an inflection point, right? The moat of eToro is much stronger. The valuation is a fraction of what Robinhood is. And you saw in this quarter that they reported, it's starting to gain momentum. So I think that's kind of the value play in the, let's call it like high valuation stocks.
I saw, Dan, I just want to ask you, I think I only saw one sell in your coverage universe. Correct me if I'm wrong. but I think there's only one underperform. Is that Circle?
Yeah.
Why is, and I know sometimes you have sells, maybe sometimes you do,
yeah.
Sometimes you have strong sells. Is this a pound the table sell?
This is like a sell with a vengeance.
With passion?
Yeah, with
All right,
passion. With a
why
lot
the
of
passion on Circle?
We initiated, it's actually good, I'm very glad you asked this, but we initiated, I was just looking at it today. The stock was at $207 and everyone was drinking the Kool-Aid, the stablecoin Kool-Aid, and we're like, it's not worth that much. It's a great company, but it's not worth $207. We put an $84 price target, and if you look at it today, it's actually, touching our price target, back and forth. Rates are coming down. Their circulation is not going up much more beyond, like sequentially the circulation of USDC is like in the mid 70s. And they have to pay more and more for partners like, our esteemed partners here at Coinbase and others in order to get the stable coin. So it's like a buyer's market, not a seller's market. So we still think there's obviously like more bad news to come on that front, and we're pressing the sell on that one.
John, let me ask you this, because we were talking about catalysts for crypto. What are risk crypto investors you think have to think about broadly in 2026? Is it leverage, John, regulation, custody risk? What should I have on my radar?
So the macro thesis, quite frankly, looks good. I mean, and I know the price action recently hasn't been great, but we're looking at massive regulatory unlocks. Under the radar was a recent IRS unlock, where the IRS came out and provided real clarity on tax issues around crypto, which I think was a underserved point. We've got massive increase in institutional adoption. Coinbase's announcement of Citi partnership, JP Morgan using. So I think there's going to be periods of peaks and valleys, ultimately. So again, the idea of trying to time the market, I think, would be the biggest risk. Because a sober dollar cost averaging approach, given the regulatory unlocks, given the increased institutional growth, seems smart. But I think, to answer your question fully, I think market timing and avoiding trying to market time would probably be the biggest risk.
John, you might have line of sight here. Who owns Bitcoin right now? I mean, is it Josh? Is it institutions? Do we have a good, know what the breakdown is?
So there are charts floating around. Depending on whether you view BlackRock as a single institutional owner, which I don't, because their sales come through people buying via the ETF. You'll see numbers saying that the majority of Bitcoin is now institutionally owned. There's been recent selling from large old owners of Bitcoin. So I think the general thesis is it's moving more institutional, but again, you have to unpack the nuance of that. The ETFs have been extraordinarily popular. And so I view ETF as retail ownership, even though it's coming through an institutional wrapper. So I think we're looking at about roughly 50% ownership of institutional versus retail.
Mark, I'll end with you. Obviously, no surprise, one big theme we're talking about today, all things AI. When clients ask you, Mark, help us understand how AI and crypto intersect now and looking ahead. How do you explain that to them?
Yeah, well, I just gave one example with Galaxy Digital. Another is HUD 8, which is a company which has had as its basis Bitcoin mining, and then was able to evolve into a hybrid company that also had AI data centers. What is the common denominator there? Energy. It's the energy underlying this, which is really the key underlying theme, that if you can harness that energy, collect energy-related assets, then those can be allocated to Bitcoin mining, to AI training of large language models, or whatever the next technology is that comes along. So I think that as it pertains to AI, and I'd say this for crypto as well, you really have to be open-minded and flexible at this point, because we're so early. Even crypto. We just had the 17th anniversary of the release of the Bitcoin white paper. Bitcoin is not even an adult yet. It's still a teenager. We act like we're in this next stage of institutional adoption, when really we're in a very nascent period. With regard to AI, yes, there were folks who were talking about AI a few years ago, but not like now. Not with the kind of intensity that we've been seeing. That's going to be going into directions that we cannot foresee at this point. So it really is important to be flexible, to follow the trends, and to be open-minded, and to find those common denominators, such as energy.
As one guest put it to me today, he thinks AI, we're not even in the early innings, we're still in the batting cage. There you go. Fellas, great discussion. Thank you so much. Appreciate it.